Hey everyone, welcome back to Corporate Dakota, the place where we dissect company filings faster than a shark circling chum. And in this report, Flex Ltd might just be giving us a masterclass in managing supply chains through turbulent times, so buckle up because we are diving deep into their latest quarterly report. This is a big one for Flex Ltd as they navigate economic headwinds and global complexities. So let us break down what really matters in this filing. And hey, if you love getting clear, concise breakdowns of important financial documents and want to join a community that does too, make sure you are subscribed and check out the Discord link in the description below. This is where you can join the conversation and get even more behind the scenes insight. Gates. Alright, let us kick off by looking at Flex's financial snapshot as of late September 2025 and comparing it to March 2025. What jumps out is the total assets, which climbed from roughly $18.4 billion to over $19.5 billion. That is a healthy increase, showing the company is growing its asset base. This growth is partly fueled by a rise in goodwill from $1.34 billion to $1.375 billion. A $34 million increase here suggests some recent acquisitions or business expansions, which is always interesting to see given how companies manage their growth strategies. Now let us look at liabilities. Current liabilities grew from just under $9.9 billion to over $10.3 billion. This is mostly because accounts payable shot up significantly by about $1 billion. That could mean they are buying more inventory or services, which is often a good sign of business activity, but it also ties up cash. Long-term debt also saw a noticeable increase from around $2.5 billion to over $3 billion. This could be them borrowing to fund growth or investments, which is common for companies expanding capabilities. Moving on to the income statement, where the real story often unfolds for the 3 months ending the 26th of September 2025, net sales were $6.8 billion. This is up from $6.5 billion in the same period last year. A few percent increase is decent in this market. Cost of sales also went up from $6 billion to $6.18 billion. This is expected when sales increase, but what is crucial is how gross profit is performing here. Gross profit moved from $531 million to $614 million in the same period. That is a 15% jump, which is fantastic. This means despite higher costs, they are managing their operations much more efficiently. Now look at operating income, which was pretty stable at around $296 to $297 million for these 3-month periods. Even with increased sales and costs, the company managed to keep its operating profit consistent, which shows good cost control and operational leverage. For the 6-month periods, the trend is similar. Net sales went from $12.8 billion to $13.3 billion, an increase of about 4%. Gross profit for these 6 months improved from $1 billion to $1.186 billion. That is a solid 18% increase, showing very strong performance in managing their core business operations. Looking at shareholders' equity, we see a positive trend. Accumulated earnings grew from $1.28 billion to $1.675 billion in the 6-month period, ending September 2025. This indicates the company is generating profits and retaining them, which is a very good sign for long-term value. Shareholders' equity as a whole increased quite nicely from about $5 billion to over $5 billion. This is a good indicator of the company's financial health and growth. Cash flow is king, and Flex is showing strength here. Net cash provided by operating activities for the 6 months ending September 2025 was $852 million. This is a significant increase from $659 million in the prior year period. This improvement is driven by better net income and stronger changes in working capital, which means they are managing their short-term assets and liabilities more effectively. This is crucial for day-to-day operations and avoids any short-term cash crunches. Investing activities show they spent $334 million on investments in the period. This is down from $206 million last year, which is actually a good sign, meaning they are being more selective in their investments, or perhaps some large capital projects. Concluded, this careful approach to investing is often a hallmark of prudent financial management. Financing activities show a net outflow of $575 million. This is largely due to share repurchases and debt repayments, but the company also borrowed $500 million, so they are actively managing their debt and capital structure. Now let us touch on a few key points from the notes to the financial statements. The company's 2 main business segments are Flex Agility Solutions. FARS and Flex Reliability Solutions. FARS saw revenue increase driven by demand in data center cloud, while FRS saw strength in its industrial and health solutions businesses. The company also disclosed a significant event, a missile strike on its Mukachevo, Ukraine facility in August 2025, causing $41 million in impairments. And inventory write-downs, this is a stark reminder of geopolitical risks impacting global businesses. Despite this, the company activated contingency plans in transit. Yind production, demonstrating resilience. When we look at revenue disaggregation, a large portion of Flex's revenue continues to be transferred at a point in time, meaning they recognize revenue when a product is delivered or control is transferred that is common for manufacturing companies. Share-based compensation is also detailed here. We see stock-based compensation expense for the 6 months ending September 2025 was $71 million. This is a significant cost, but it also reflects how they incentivize their employees, which is a normal part of business for publicly traded companies. Long-term debt details are important here. Flex has various notes and bonds outstanding, and they recently secured a new $2.75 billion credit facility, maturing in 2030. This provides them with ample liquidity and flexibility for future operations and investments. A notable item from the fair value section is the contingent consideration related to acquisitions, which is valued at just $2 million as of September 2025. This is a small amount and indicates any post-acquisition adjustments are minor, which is good news for financial stability. Business acquisitions are also listed. A $35 million acquisition in Poland for the FRS segment is mentioned. This indicates Flex is actively pursuing strategic growth through acquisitions to expand its capabilities. Under commitments and contingencies, we see legal proceedings concerning sales and import taxes in Brazil and tax assessments in another foreign jurisdiction. Flex is actively contesting these matters, and while the outcomes are uncertain, management believes they will not materially impact the financial statement. Looking at share repurchases, Flex has been actively buying back its own shares under its current program. There were $1.5 billion available for repurchases as of September 2025. This shows confidence from management and a commitment to returning value to shareholders. Finally, segment reporting shows the health of their two main segments, Flex Agility Solutions and Flex Reliability Solutions. Fast revenue grew driven by data center cloud demand, while FRS saw strength in industrial and renewables. Both segments are growing and showing improved margins, which is a very positive indicator. So what is the verdict on Flex Ltd? Well, based on this filing, Flex is demonstrating impressive resilience and strategic management. They are growing their top line, controlling costs effectively, and generating strong operating cash flow. The increase in goodwill and long-term debt suggest growth-oriented strategies. And while the Ukraine missile strike is unfortunate, the company handled it with contingency plans showing operational preparedness. Their share repurchase program and new credit facilities indicate a strong focus on financial health and shareholder returns. The company's direct global supply chain capabilities and broad industry reach are clear strengths in today's complex business environment. However, their reliance on a few large customers and currency fluctuations remain risks. As always, overall Flex Ltd appears to be navigating the current economic landscape with a solid strategy and strong execution. The future looks cautiously optimistic with continued growth potential in their key segments. Deep dive into Flex Ltd's latest SEC filing. What do you think about their financial performance and strategic moves? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate breakdowns. You do not want to miss and join our Discord community, linked in the description for more exclusive content and discussions. Thanks for watching. See you on the next episode.